Hello there and welcome to the Hashpower Academy. My name is Jake Scanlon. I'm the lead educator here at the Academy, and this is a place to learn anything about Bitcoin and everything about Bitcoin, starting with the fundamentals. Here at the Academy, we go to the energy side of things first, then the compute Bitcoin mining aspects, which consumes that electricity to produce hash rate, and that hash rate is seeking to find that next block in the chain and capture some of that 450 Bitcoin that right now is distributed to the entire network. And as more energy and more compute expands under that amount of Bitcoin issued per day, it reprices Bitcoin not just against dollars, but also energy and compute. So these are the sorts of things you can learn at the Hashpower Academy. Today's topic is buying versus mining versus MicroStrategy. Three different paths to the same destination. And that is to say that one Bitcoin right now is a timeless form of monetary unit stored on a blockchain defended by energy and compute. And so all of this expansiveness of these sectors of the Bitcoin industry, so to speak, are continually increasing your purchasing power. What do I mean by that? Well, one Bitcoin does not equal one Bitcoin. Why? Because that is a self-circular argument, which doesn't make sense. If the network average production cost for Bitcoin, that is the exchange rate from electricity into Bitcoin through Bitcoin mining, is $50,000 of energy per Bitcoin at a 5-cent electrical rate, divide one by the other, that is 1 million kilowatt hours per Bitcoin. Isn't that a different way to see it? That is a pricing system of energy on a Bitcoin unit of account. These are the sorts of things that we discuss here at the Academy. But on today's topic of buying, mining, and MicroStrategy. So we have x-axis time over time, and the y-axis 1 Bitcoin. Now, there's about 2 million Bitcoin on exchanges. So buying right now is, well, a lot of that Bitcoin will be in collateral, in custody, some people trading it. And that is quite low now because of the full 21 million supply, 2 million of it being on the exchanges. That has continually dropped over time. And with more people seeking to cold storage and protect their Bitcoin from any potential risks, that is the one comparison we can make to begin with, that with buying, it's completely economically sovereign. But with mining, if you don't have the access to cheap electricity, that computer you're probably going to be sending to a host. So there is a trust element there. And MicroStrategy, they are holding the Bitcoin on your behalf, another trust strategy. So the first comparison is the lowest risk in the context of losing it all, so to speak, is if you buy and hold your own Bitcoin, you have that security mechanism there. But mining and MicroStrategy, those can have different risk. And so in terms of timeless reward, we have the direct unit of account of the benchmark, so to speak, to compare to mining and MicroStrategy. So the question here, if you were mining Bitcoin and you purchased 1 Bitcoin's worth of mining machines, well, you would start with 0 Bitcoin, meaning that you haven't mined any yet. And so at the start here, you've purchased your machines with your 1 Bitcoin. What is your goal? You're trying to mine more than a whole Bitcoin. The objective goal of mining is to accumulate more Bitcoin over time than what you could have purchased in the first place. So if I spent a Bitcoin on buying hardware, I want to produce, consider this the Bitcoin yield, I want to produce inevitably more Bitcoin than what I could have purchased in the first place. And that's why people mine. You buy machines to produce Bitcoin at a lower rate, priced against the machines and the depreciation there. And so there's a few things there when it comes to mining. You've got the depreciation of the machine, the tax-deductible nature of that, and potentially the electricity as well. And you're producing Bitcoin as a yield. So you're not depending on accumulating Bitcoin from an exchange because you are the producer of the Bitcoin. And the second part to that is mining has the benefit of electrical bills allowing you to buy Bitcoin without fees. This is to say that you either pay the electrical bill with dollars, which essentially is keeping the Bitcoin you've mined, or you're selling some of that Bitcoin to pay the electricity. And so your dual option is there: pay with extra dollars to effectively buy the Bitcoin you've already mined, or sell Bitcoin, which is you're trying to accumulate Bitcoin, so you wouldn't want to sell it, so you would use additional dollars. And so you essentially have this opportunity with mining to buy Bitcoin without fees. So that's an interesting comparison there. And when it comes to MicroStrategy, you're buying dollarized shares that have a certain amount of Bitcoin per share. So let's just chart that here in orange. So let's just show it as a bar. Let's just show it here with M. So you've got 1 Bitcoin's worth of MicroStrategy shares. How much Bitcoin per share is that backed by? Now, the share price to the NAV, the underlying Bitcoin amount, is about 1, 2, 3, 4, 5. It's about 50%. So there's about 50% of your MicroStrategy shares is a quantity of Bitcoin. Now, what they do is they have options and converts and equity and all these different weird and wonderful things that MicroStrategy are doing. So you have the dollarized amount, but that's continually fluctuating. So you have the potential for the shares to increase relative to their underlying Bitcoin reserves or decrease, who knows? And slowly and incrementally over time, the amount of Bitcoin per share is increasing, which raises, let's just say it does. We don't know how much Bitcoin they're going to be able to accumulate. Remember, there's 2 million on exchanges. Maybe they have partnerships with large-scale Bitcoin miners or huge OTC deals with sellers at certain prices. But large institutional buyers and sellers, they want to do everything off of the order book of exchanges in private, shall we say. But the same sort of risk approach here is this. If you buy a Bitcoin over time, you've got a Bitcoin. If you put it in a platform and loan against it, you could lose it. If you put it in some form of yield producing thing, you could lose it. It's all risk and reward. But the overall approach here is this, that Bitcoin is the unit of account, your benchmark for this. You hold 1 Bitcoin, over time it doesn't change. Mining, as I said, is this, you convert your Bitcoin into buying machines, or even half of it, and keep the other half for paying electrical bills. That's another approach. And so you've got this benchmark of starting at 0 Bitcoin mined. You'll produce the most amount of Bitcoin in the first few months because continually the network's expanding, the compute is expanding, and the amount of Bitcoin in blocks stays relatively the same when the majority of Bitcoin that people are mining is subsidy. So if there's a constrained amount of network revenue and network hash rate and network energy are continually expanding underneath, then miners with the difficulty adjustment are continually getting less Bitcoin per terahash or exahash per day. So diminishing returns, basically. So the slope of how much Bitcoin per day you're going to mine, the quantity decreases, but the price may go up. Because this is all in a Bitcoin unit of account, not in dollars. I've shown a fluctuation of the potential for MicroStrategy shares because they're dollar, and their dollar converting fiat yield into more Bitcoin per share. And so how steep this climb is, we don't know, and how much this outperforms Bitcoin, who knows. But the overall understanding here is you've got this timelessness of Bitcoin in of itself, which we recommend, and mining is that approach that if you want a tax deduction to buy some Bitcoin without fees and produce Bitcoin at a production cost as a yield, you also get a free transaction in a sense, because when you plug into a mining pool, you mine up to a certain amount and then they'll let you auto withdraw it without a fee typically. So if you just want the mining rewards to just auto deposit to your cold storage, you're getting essentially a free transaction, a tax deduction, and buy Bitcoin without fees. I'm a biased thing about mining. I've got some bias when it comes to mining, but those are some really good benefits. But you've got to understand the efficiency and the mining economics things. But buying is good, but it's going to get more and more scarce on exchanges. As more people pull Bitcoin off exchanges, I do see a point where the amount on exchanges drops below the amount that's remaining to mine. on the MicroStrategy side of things, they've got a lot of Bitcoin. They've got over 500,000 approximately of the full 21 million supply. So on the side of things that we explained here, with the energy sector expanding, compute, and all the other different pieces, when you own a quantity of Bitcoin, you have you have a stake in the growth of the entire network, because Bitcoin is the units on the database, defended by a compute, defended by energy, and all the different aspects of, say, the heating side of things, which has the potential to, I've been thinking this recently actually, that if a lot of people a lot of people purchase Bitcoin mining electric heaters, they are not strictly economic miners. They're not trying to buy $50,000 electricity to produce an $80,000 Bitcoin. They are just mining to produce heat and subsidize some of that cost. So the amount they can produce is less than the amount of Bitcoin they earn is less than their energy bill. And so they're not mining economically. It's for a secondary use of that heat, but subsidized energy costs, because you're producing Bitcoin in the process. And if enough people did that, it would demonetize the entire mining industry that's on the profit side of things, the public miners. And a lot of them are diluting their shareholders continually, which is not what we like. But on the buying side of things, if balance on exchanges was to decline to something really, really low, you've got exchanges taking risks at that point, because they are constantly managing an inflow of Bitcoin from different sources that might be a problem, and they're constantly managing an outflow of Bitcoin, custom withdrawals, people wanting to store their Bitcoin. There's a lot of people that just deposit in some dollars or stable coin and immediately withdraw Bitcoin, and that is their exchange experience. And exchanges continually in decline of Bitcoin reserves, they might take more risk, or more other alternative coins taking risks in that department as well. And the risks on the MicroStrategy side of things are, well, how much longer can they do? How much can they continuate this conversion of high volatility into different products, markets, and services relative to Bitcoin? And they're going to have a lot of competition in this space in terms of all different financial firms, namely BlackRock as well, and they're all going to try and offer anything and everything for you to give them your Bitcoin, and give some form of benefits and loaning against Bitcoin. All those sorts of things are going to be available, but the volatility is going to shake out a lot of people, and the risks that they are custodying the Bitcoin for you. So that is a significant risk in of itself. I think I'll leave it there. But yes, there's potential with these two to create more reward than just buying Bitcoin, but with different sorts of risks from both sides. I think with mining side of things, you get the education. If you start with getting a little Bitax mini miner, that's like stage one. If you want to go further than that, get a hosted mining machine, that would be like stage two. And if you want to mine yourself because you've got a decent enough electrical rate, that would be stage three. And you can learn all those things at the Hashpower Academy. On the buying side of things, yeah, the ability to buy Bitcoin has always been there. Here at the Academy, we can teach you about the exchange rate between electricity and Bitcoin, which is going to come in the future. It will be the second unit of account economics dynamic that Bitcoin has. The first one is with block space. And with MicroStrategy, it's really going to be interesting to see the different products, markets, services that they bring out. Whew, right, I think I'll leave it there. So 3 in the morning, it's where I get my best work done. And I will see you in the next video. Like, subscribe, all that fun stuff, and I'll see you. Goodbye.